This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news that while oil producers see sharply lower demand, the world's largest economy shows rising retail demand. But first, the overnight dairy pulse auction saw skim milk powder dart higher than expected to $2,800 a tonne, its highest level since February 2023. The whole milk powder component, however, slightly undershot expectations at $3,438 a tonne, but holding its level of 4 weeks ago. It is not a serious weakness in a series of auction events where the whole milk powder price has been a little volatile. And staying with commodities, OPEC cut its demand forecast for the second time in 2 months. That suddenly dropped the price of crude oil in all markets by almost 5%. So it might be a surprise to know that retail demand at physical stores rose last week by 6.5% from the same week a year ago, far outpacing inflation and its fastest growth since the end of 2022, when it was recovering from the weak pandemic base. Prior to that anomaly, it is its highest growth rate since 2006. Away from the business community and the Masters of the Universe crowd, a comprehensive review of US incomes for 2023 revealed a 4% rise in the year and no change in their poverty rates, which now stand at income levels below $30,900 or 50,000 New Zealand dollars. Their poverty rate was marginally lower at 11.1%. And the NFIB Business Optimism Index slipped in August, but only off a very high level in the prior month. Even after this slip, it is still near its highest since the end of 2022. And there was another very well-supported US Treasury bond tender today, this one for their 3-year note. That brought a 3.40% yield. That is much lower than the 3.75% yield at the prior equivalent event a month ago. In China, foreign demand for their exports was strong in August. They increased by 8.7% in August from the same month a year ago, the most since March 2023, and to a 23-month high of $309 billion US. That was more than the expected rise of 6.5% and more than July's growth of 7%. It was the 5th straight month of expansion there. The Chinese factory sector has been held up by international demand, not domestic demand. New Zealand and Australian demand for Chinese exports is falling, however. Ditto the EU, Japan and South Korea. Demand from the US is up, but only by 2.8%. The countries with the largest demand increases are Brazil, Southeast Asia, and interestingly, Taiwan. In China, they're about to require basic military training for high school and university students, part of a broader push by Beijing to place a greater emphasis on national security and education. Outside their borders, China will help train 3,000 law enforcement officials over the next year to tackle global security issues and better protect Chinese interests beyond its borders. That's what the country's public security minister said. Australia's Westpac Melbourne Institute Consumer Sentiment Index dipped by 0.5% in September from August, the 6th decline in 2024. Consumers are still concerned their economy is heading for a harder landing. They are less fearful, though, of interest rate cuts, but more fearful of losing their jobs. The drop in business sentiment in Australia was a surprise, an outside slump to a 9-month low and the weakest August since 2021. The Australian prudential regulator APRA has started the process to have banks cull their hybrid capital issues. They say they won't work as intended in a crisis. They're learning the lessons from a 2023 US and EU bank fizzles. Banks who need more capital will have to raise it directly as full loss-absorbing shareholder support. The US Treasury 10-year yield is now just on 3.64% and down 6 basis points from yesterday. And the price of gold will start today up $11 from yesterday at $2,513 an ounce. And oil prices are down $2.50 at just on $66 a barrel in the US, while the international Brent price is now just over $69 a barrel. And these levels are a 3-year low. And the Kiwi dollar starts today at 61.5 US cents and marginally softer from yesterday. Against the Aussie we're 10 basis points firmer though at 92.4 Australian cents. Against the euro we're also 10 basis points firmer at 55.8 euro cents. That all means our trade weighted index starts today at 69.6 and little change from yesterday. And the Bitcoin price starts today at $57,169 and up 1.3% from yesterday. Volatility over the past 24 hours has been modest, at just on plus or minus 1.5%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.